All right, so this is the study group session for the week ending uh the 19th, right? The 19th, or it's the beginning of the 19th. The beginning of the 19th ends the 25th of July. Yeah. So yeah, it's a lot to cover. The main event is, of course, plays for Facebook earnings, because Facebook earnings is going, it's going to print. So we're going to just kind of go ahead and get started with a few things. Like we normally go through a lot of things, right? We go through existing plays, market sentiment, all of that. I'm gonna go through all of that, but I'm starting with Facebook earnings because we already in some Facebook plays, and I want to get right into it, right? So with that being said, let me switch over to another screen. Yeah, so first and foremost, we can't really talk about the market we can't talk about Facebook without talking about the market, right? So as you know, when the market ended yesterday, on Friday, everything was down. Like SPY was down, QQQ was down, everything was down. So yeah, Facebook got pulled back a lot. Um, just to put things in context, we actually had a good week overall. We tapped 358.49, so we got up there. We was holding 355 for a while. Then the market started pulling back because of the Fed meeting, and then everything kind of went down from there, right? So the end, we never dropped below 340. Now, I just wanted to be realistic about some things. And, I played Facebook earnings several times, so it's a lot of things to consider. One thing, according to FactSet, Facebook has a 40% win rate for the week before earnings in July for July earnings, right? So that means that it's a 40% success rate. So whatever the bearish sentiment is could possibly be the case, but that again, it goes along with the overall market sentiment. So I'm on a weekly right now. This is a weekly chart. But one thing I want to point out is, since I play Facebook earnings, you can go do the research on this yourself. The week before every single Facebook earnings, we have a pullback. We have a nice pullback the week before, and then we run up. So sometimes it don't pull back a lot, depending on what it is. Like, because if the market is bullish, then a stock is only going to pull back with so much, right? But yeah, so normally the week before earnings, every earnings, we have a pullback. So this week starting is the week before earnings. So we may be able to get some nice earnings plays for even cheaper than we had, only because, and the reason I say even cheaper is because, again, the market pulled back substantially. We were pushing 437, and 438, my bad. We pulled all the way down to 430, and we climbed back up to 431 on SPY. So the market was pretty bearish on Friday, and QQQ hit 357 and bounced. So that was a good sign right there. But just again, go back to Facebook for a second. So this is a weekly chart on Facebook. I'm gonna break this down a little further. But yeah, so this is a weekly chart on Facebook. If we go back to January earnings was a little different. We had a nice run up for January earnings because January earnings, because in January, remember they broke into the White House, right? Them people broke into the White House or whatever the Capitol, my bad. And so mid-January, the week before Facebook earnings, let me just go ahead and break this down into a daily chart so we can look at it. This is important data there. So we go here to January. So the earnings in January were on the 27th. And so the Fed spoke that day. And keep in mind, the meme stocks were running. So we had a different type of market, right? Facebook was bearish the whole time. But I remember Facebook had started coming up in January. We started having a nice, increase and, uptrend in the stock, in January. And then when, I don't know exactly what date it was, but the date that the capital got overrun, the whole stock market pulled back that day. And I remember Facebook in particular pulled all the way back down from like it got down to like 250 something, because I remember buying Facebook at 250 something, and I was like, I gotta buy it. So I got into some Facebook plays around 250, and I got the 300 strike, I got the 290 strike, and some other stuff, because Facebook was up. We weren't used to really being below this range here. So when Facebook actually happened up in here, so Facebook pulled all the way back down, like we got into this range. So anyway, got some nice plays in there, and Facebook ran up. Now keep in mind, so right here around January 26th, 25th, the memes were running. GameStop was running, AMC started running, everything. So the Fed spoke. Now, the day before earnings, Facebook went all the way up to 286.4. Now, keep in mind, I had plays that I bought at 254 and 260, right? And them things were up like I said, I was up 8 bands. I had like $2,000 worth of plays. I was up, my plays were worth $10,000 at this point, probably 10,000 plus. And the day of earnings, earnings were gonna be after the close. I was waiting for Facebook to get the 300, because I just knew Facebook was gonna go get the 300. Facebook had already touched 300 before, back in November earnings. So I'm just waiting for it to get the 300, and the Fed spoke. Well, before the Fed spoke, because the Fed wasn't speaking until like around like 2 o'clock, 1 or 2 o'clock, the market started to pull back, and I didn't secure any of these profits when the market pulled back. And then right before the Fed meeting, if I could break this down a little more, would be even better. But right before the Fed meeting, the market pulled back even more. And you know what I did? I said, let me average down. I went and bought the 260 strike, because look at all this, like the stock pulled all the way down here, but then it actually went down even lower that day. It went all the way down to 250 something on the day of earnings, right? Came all the way back up. It closed here, right? But either way, the Fed spoke. I'm thinking everything gonna be good. So I averaged down. The market didn't recover. The Fed spoke until like the last 15 minutes of power hour. So we never got a market recovery out of that day. Now keep in mind, so the next morning that market opened, the stock, so keep in mind, the high of the day of earnings, the high of the day was 286.1, right? The next day after earnings, the stock ran all the way up to 286.79. Now, in a bearish market, I didn't take profit at the top, because I was still just like had my neck stuck out thinking that Facebook was going to 300. Man, lost everything on the 28th. Lost everything on the 28th. Now, I ended up making 18K on AMC that day, so it washed out everything. But that's still dumb money. Money that I let go away, a whole 10K worth of money that I just let go away, because I was hoping and willing and waiting. I held through earnings, and I averaged down on a play that I should have sold everything. So that was the January earnings. But keep in mind, but we did have that sell-off pre-earnings. So I'm gonna tell you, the way the market works is very funny. Market makers don't want you to know what they're doing, right? But it's always a plan, but it's always contingent on what the market is doing. said that to say the next earnings after that, which was April earnings. So the week, this is a daily chart. Okay, so earnings was on the 28th. All right, so the week before earnings, this week right here, see, we had a substantial pullback. Now, hold on, where is this week? Hold on 1 second. Bad. Trying to pull something up here. Yeah, the week of the 19th. So this was the week before earnings. Stock pulled back, kept going down, nice and low. You know what I'm saying? So that week ended on, that Friday here. Now keep in mind, on that Friday we had a 3-1-2 reversal pattern, which is a bullish pattern, right? But 3-1-2 going into the week of earnings. Week of earnings, we had a nice run up. Earnings was on Wednesday. Yeah, but the thing is, we had a lot of earnings plays too early, and no one expected for the stock to pull back as much as it did. So, like, I was telling KK the other night, I'm like, we're gonna have a pullback before earnings. I'm not sure how much, and I'm not sure when or how many pullbacks, because the last earnings we had a few different weeks. It was the last 2 weeks leading up into earnings, because if we go back another week, we was having them pullbacks, and we be getting them fake outs too. So, but yeah, this was the week of earnings. The high of the day before the day of earnings, was earnings was 27th or the 28th, 28th. Yeah, 27th. What the hell? Oh yeah, 27th. Yeah. So this day before earnings, the day of earnings, after hours, Facebook ran up like crazy. Then the next day ran up even more. But then we had that pullback, but we still was above the close of the previous day. But after that, we tapered off, just tapered off, that whole following week. That's why August is such a big month for Facebook, because after, it's a really big month, because no matter what happens for earnings, it pretty much, earnings. I mean, August is just a big month for Facebook, right? But yeah, you can see what happened last earnings. We had a nice run up. The stock, it printed like crazy, and their earnings are going to be after hours. So it's important to know that whatever we do is going to happen after hours. Now, all right. So I said all of that. Now this is where we are now. This is the situation we're in right now. Facebook been hitting all-time high after all-time high after all-time high every week. We've been leading up. Now, keep in mind, all the way through May, I've been getting us in Facebook plays, from earnings all the way up until, really in May, like going up. We've been in an uptrend ever since the beginning of May. And Facebook been printing ever since the beginning of May, right? And we've been just going into like in the higher ranges where we belong, where we supposed to win after earnings. But anyway, like stocks pull back, things happen. We in a bull market now. This is a successful month for Facebook. It's a successful month for the market. Now, things to consider right now. So the overall sentiment of the market right now is still bullish, right? We had a crazy week, and with the Fed information and then people taking profits, it was a lot of profit taking in the market. And then another thing, what market makers were saying in FactSet, and what a lot of the plan administrators, because keep in mind, Facebook is one of them stocks that's really big in 401ks, and so in hedge funds and mutual funds and stuff like that. So it's a very substantial stock that's in that it thrives based off of the market too. So it can't move on its own. Market makers can come in and save it and stop it from going below a certain level, but pretty much it's going to move the same way the market moves. But it's one of the most it's a stock that's in most portfolios, probably just as much as Microsoft is and Google. So it's a stock that's the overall market is pretty bullish on. So yeah, so back to this week. So right now, any thoughts you got on Facebook or any individual stock cannot be true without the overall market trend. So I'm gonna give you an idea. So like I'm gonna give y'all some levels and some thoughts on what I feel about Facebook. But first I'm gonna start like this. You gotta look at it like this, like you know, rising tides pretty much lift boats. If it ain't no rising tide, it ain't no boats gonna be lifted. So when the market decline, you know, it put pressures on the stock. So it's, you know, and the easiest way to trade is, you know, I always say the trend is your friend. So if you follow the direction of the market, it matters in every decision. So I like to always evaluate the market first, because that's what market makers do. That's what the market makers do. And once that's determined, then I'll use the data that I have to determine whether or not I should buy Facebook or sell Facebook in correlation with the market trend. So with that being said, like if there's so many ways to look at this. So I have right now. So right, if I'm going long for Facebook right now, you know, depending on the direction. If Facebook is over 321, you know, for the long term, you know, my target will be 344. You know what I'm saying? Like that's if I'm betting that it's going to drop far down. Like this, I'm just giving y'all different scenarios. If I'm just looking for a short-term investment or short, Facebook below 344, you know, I would have a tight stop at 345. So if it goes to 345, I would get out of my short position, but my target would be 321. You know what I mean? So like that's where I would get out of my play. If I'm looking for swing trades ideas, you know, for Facebook, you know, I would need Facebook to be over 341.68. My target would be 344.77, and I would put a stop loss at 340.69, right? So those would be my targets for a swing. A short swing, if I'm going to play puts on it, you know, my target would be, I would get in for plays, you know, like still in that 341 point something range. My target would be 321.6. And I would get out if my stop loss, I would have it set at 342.67. So if Facebook touched that level, then I would get stopped out of my short position. If you look in the day traded, you know, on the short term, I would just look at, you know, if it gets over 341.68, my target would be 342.73. You know, I do it like that, and I would have a stop loss at 340.88. You know, for the short term, 341.68, which is, you know, same thing. My target would be 337.92, and my stop loss would be at 342.48. Now, again, this is all based off of previous price action, like all levels that I have on previous charts that I've drawn lines on from Facebook. But again, this is all based off of what the market could do. And this is all based off of the last thing off of the market close on Friday. Now, keep in mind, the overall market was uncharacteristically bearish this week, but the market been running up like crazy. So with all of those Fed meetings and everything that was going on, people took profit. And then it was a lot going on in the market. So, you know, we just have to, we have to keep that in mind. You know, we have to keep that in mind. And so don't panic. Don't be on no, trying to make no weird decisions to sell stock or jump in and out of plays because of what could possibly happen. You want to just make some educated decisions on what to do with the market going forward. I'm glad you elaborated on that. Those are two different conversations that I was having about the thing about the out of the money strikes. That one was something different than what we're talking about, because the reason I say that is because those out of the money strikes, what I was talking about with those is yeah, I just would stay away from those only because the probability of getting to that particular strike is higher. You know, I mean, it's less likely when the strike is out of the money. Like overall, it doesn't matter what play you in. It has nothing to do with like out of the money, in the money, or whatever strike. Any play that you get in, it should be based off a percentage. You know, like if you say, okay, what's the likelihood of this particular strike finishing in the money, or not even finishing in the money, or getting into the money at some point before the expiration of my contract expiry. Like if I switch over, which I am going to, I'm gonna switch over to the options chain so I can explain that probably better if I just switch over. So I'm gonna switch over. It's a good question because we talked about a lot in that call, but yeah, that one thing I was talking about, just an advanced strategy that some people use just to play out of the money strikes. But yeah, let me just switch over. So like for example, next week, or this week right here, when the market closed on Friday, and I'm on Thinkorswim, by the way. Market closed on Friday. A lot of us are in this 345 strike. A lot of us are in this 350 strike, and I know some people are in the 355 strike. You know, yeah. So the thing is, if y'all notice, and I'm glad this is important too. So so check this out, right? So as days go on, things change. You ever like look at the weather and you see the storm? Like you'll look at your forecast on your phone or whatever, and it said it was going to rain on Friday, but then as you get closer to Thursday, now it's cloudy and now it's no rain for Friday. The same thing changed in the market. So if I post a strike in a position, you can't just look at that strike on Monday and just get in there well, he called this play out, so I'm gonna be solid in that play, and there's no, you know, I'm just gonna go off of that, and then your only recourse if something changes, well, you said, well, yeah, but things change, and if you get on a Zoom every day or whatever, you'll see like we role plays all the time. I'll tell somebody like, okay, I got out of the 355s and I rolled, you know, or somebody be like, well, should I average down on this 355? I'm like, no, you should probably grab the 350. It pulled back. Now the likelihood, because, and the reason I say that, look at this strike, for example. I'm gonna go back. I'm gonna stay on this week. Look at the delta on this 355 now. Some people may say, okay, the 355 is cheap. I can go ahead and grab a lot of these now because it's going for $73 now, and it's down $71 yesterday. I mean, on Friday, right? On the whole day. But the delta is 12. So that means it's a 12% chance of that particular strike being in the money at some point before expiration, based off of the current market sentiment and where Facebook is. You know, so I don't care how many 355s I have. And everybody be so concerned about what it looks like in their portfolio. Yeah, if you average down on that one strike, it's going to show in your in that particular strike, when you look at it in your portfolio, that your average cost went down. But that doesn't have no real effect on your overall portfolio if you grab a better strike. It's almost like if you bet that if you placed a bet that Lamar Jackson was going to score 2 touchdowns before the finish of this game, and at the beginning of the game, and now we at the 2-minute warning, or I'll say you're in the last quarter now, you're in the fourth quarter now, and Lamar hasn't scored no touchdowns, and you got a chance to reevaluate your bet. Are you going to double down on that bet, or are you going to change it up now and say, okay, well, I think he's going to score 1 touchdown, or he's going to make this many passing yards, or he's going to make this many rushing yards? You're going to recalibrate. You're not going to stick to that same strategy. Or even if you were playing in a game, or you was playing like if you was John Harbaugh, you're not going to just say, okay, I'm gonna keep running the ball and it's not working. You're going to change your strategy up. So same thing. You learn average down, and people learn average down. They like, okay, this is a strategy, but it's not the only strategy, and it doesn't work all the time. Sometimes sometimes you're gonna have to choose a better strike because things change. So, you know, so I ain't had no 355s last week. You know what I mean? I had all 350s and then some 345s. So I'm always rolling back. So I'm always recalibrating. I'm looking at the Greeks. I'm seeing what the Greeks are saying, because you gotta look at it like this too. Yeah, you can grab a bunch of these. And yeah, like Mark Zuckerberg, like if the market opens on Monday and SPY rallies up, I'm betting that SPY is gonna have a nice bullish week this week for a few reasons. Um, y'all can see my options change screen, right? Y'all can see the strikes.
Yes.
All right, cool.
Yeah.
Cool. All right, cool. So yeah, I'm betting that we have a good week this week. And that's weird that changed. That weird. So I was looking at the seasonality for Facebook this week, and it actually changed. It changed up this week. So it looked like it changed to 67%. So it looked like the high, it went from 40% to 67% now. Just some real time things I'm looking at. But real quick, I want to tell y'all this, right? Because we going into this new week, and it's a lot happening this week. Shit, where did it go? My bad. What the type of shit I paused for? Hold on. Yeah. So in terms of SPY, right? SPY has a 67% success rate for this week that we're going into, right? So if the market, for the market to be down that low, and there was a gap that it was filling down to 430. I was hoping that it's totally closed that gap, and then we just have a bounce, and then the SPY runs up. I'm bullish on SPY for this week because I got some calls that don't expire until the following week, just to kind of recoup some of the loss from this week. But if SPY takes a hard bounce and then shoot up, it doesn't take but one or two market makers to make the market sentiment change and everything bounce. It looked like on the daily, SPY was about to make that reversal, and I told y'all right after the market closed, I was still watching. The SPY jumped up to 350, to 435 right before the market closed, right after the market closed. So it created a new broadening formation. So SPY can bounce. So I wanted to put that in perspective before going forward. So this 355 strike, it could come back and be something, but I don't want to play off of hope. We down $15 from 355 right now. And what we did last earnings, where we made some mistakes last earnings, is we had some plays, like we had some like some 330, what was it, like 330 and 325s and 320 strikes and stuff like that, because where Facebook was projected to go. Did it get there? Absolutely. But the whole point was those plays were dead. Those plays were dead because we had them too early. So I didn't buy any Facebook earnings plays until this past week. I bought one earnings play for Facebook this past week. I'm gonna buy more this week because I knew upcoming or the week of earnings, we were gonna have a pullback or some pullbacks, but I wanted to have at least one earnings play just in case that was the pullback we had, right? But I still like the 350 strike for earnings. But now, if Monday gives me an opportunity to get a 340 for next week, because if I'm gonna play Facebook this week, I'm sitting on my hands. Like we get a nice rally on the market on Monday, I'm gonna go ahead and take my profits on any plays that I have that are expiring this week. I'm gonna take any profits that I can get early, and I'm getting the hell out, and I'm sitting on my hands for this week and looking for earnings plays for next week. Because if Facebook drops below 340, I told y'all the next level is possibly 330, 328. That's the next major demand zone. And I just am thinking about how the prices could be down there. Now, people get scared around these times, and this is how market makers make so much money. This is how I printed so much last earnings, because now I'm going into the week of earnings right here. Look, so this 350 strike right here. This play was down $170 on Friday. But this play was down on Tuesday when KK and I recorded our video. This play was going for like 11 something. Last week this play was going for like 12 something, and even higher than that at some point last week, right? Almost 2 bands for the play. It's down. If we can get the market to pull back some more, we can get into some earnings plays substantially, and we can be up. I want a 340, but this is what I'm gonna do. I'm clutch like this. This is what I'm gonna do. If Facebook goes down to 328, you know what I'm gonna do? I'm gonna be on August 20th, please.
Yeah.
I'm gonna be down here grabbing plays for August 20th. You know, like I love this 350 for August 20th right here. Look, it's got a lot of open interest on I got 8,400 contracts being held right now in this particular strike. And on Friday, 2,700 contracts were bought and sold. So it was a lot of activity on this particular strike. It has a delta of 41. The theta is only 20. Look at the Vega on this though. The Vega is $40. So check this out, right? What this means is this, right? Now, I've been keeping notes. So this is what I did right here. I'm gonna show y'all something. Let me see. Let me show y'all something.
I remember when that 820 was like 1,300.
Mm-hmm.
And it's 950 now.
Mm-hmm. Uh-huh. But keep in mind, but that thing was even cheaper when before Facebook hit the 330. You know what I'm saying? So back in May. So it's just crazy how those things change. And I remember Asia made a comment a few months ago. It's like, how does a Facebook 400 leap look? Remember she asked that question?
She sure did. She sure did. I remember that.
Yeah, you know, Facebook, because I'm like, Facebook would be 400 by the end of the year. She's like, well, how does that leap look? I'm like, let's see how prices pull back and see how things go before you jump into that leap. But that leap is, you know, like, that's why I live for these moments. Like I said, if there's one piece of advice that I can give to any investor, whether they're new or old, and I've been saying this, have a few bands set to the side for when market crash, because we can get everything on sale and you won't panic if you have prices written down. Like, damn, if them Jordans go on sale for like $50, they like $350 right now. If them Jordans go on sale for $50, I don't care if Armageddon happened. If those prices go down to $50, I'm buying them. You get what I'm saying? It's certain things you like, I already know they're not gonna let the United States not going underground. We're not letting no country take us out. So even if we have a bad you know, something bad happened to the economy, I'm gonna buy those Jordans for $50 because they down over 125%. You get what I'm saying? So you gotta have price targets locked in. So when you're a sniper, when everybody is running around, you know, you sniping them sales. That's when I make my most sales. I'm going off of what I see. A lot of y'all ask me about Facebook plays when Facebook starts running. But when Facebook is bleeding, y'all sitting there looking at me with the side eye or hiding or standing away, not getting on the Zooms, you know, not talking, not doing anything. But when them things running, then y'all want to pop up, be like, you know, is it too late to get in the play to get your head chopped off? You get what I'm saying? So these are the times you want to buy. I live for these moments. Yeah, we all are some jackasses. I'm gonna let y'all know, by the way, we some jackasses, because last week, even with the market pullback, Facebook went to 358.49. Facebook gave us, we were up substantially on Monday, and even more substantially on Tuesday. I know I was up over 150% on them 350s for sure. And even on Wednesday when the market pulled back, I was sitting on profits. I was just letting the profits drop instead of taking profit like I was supposed to. I do that sometimes. So that's why I like to hedge my issue. When Facebook hit 355 and I know that's a resistance point, instead of hoping it's just going to go up, I'll buy an in the money put. Buy a put at the top of there if I'm going to still hold my calls, so I have some insurance on it. So if Facebook does drop, you know, I'm going to have that. You know what I mean? So that's another good strategy. Instead of averaging down or just waiting for it to just keep going up, you can do that and make some money. So yeah, but anyway, back to these earnings strikes, right? And I'm just setting y'all up properly here, right? So I'm talking about August plays, but I'm gonna go back let's go back up here. I got a plan for if things drop. Now, do I want Facebook to drop to those levels? I mean, that would be, I got plays for this week. I mean, it's coming up. So no, I don't want it to drop right away. Hopefully the market rallies so I could, you know, get what I get, because Mark Zuckerberg gonna find some way to pull the stock back a little bit, even if he had to sell some shares. Something gonna happen. and to get the stock where he wanted. But I think this zone is good. This is a buying zone, because if I'm gonna switch back over to my chart and show y'all the volume by price, so y'all can see how much volume we had at that level. But yeah, man. But this is what I like. I'm like this. If this, even for earnings, if this 340 strike, if we go below if we drop below 340, this play is down $230 on Friday. So this went from what, like 12, 13, almost $1,400 on Friday, down 200 to 1145. This was the price of the 350 strike, on Tuesday. So, but this is the thing right here. I don't care. I'm already in a 350. I got my mother in a 350. I got my mother in a 345 for earnings. My thing is this. Yeah, I paid the 350 I'm in. I paid $1,100 to get into that play. I don't care, because I know when Facebook beat earnings, this play gonna go up by times 10. I'm not tripping off of being down $300 on there, like the little small shit. I mean, obviously, I would prefer to have gotten in on a lower dip, but I only grabbed one. That's why I be telling y'all, like, don't jump in a play and grab like a whole lot of contracts, because you seen me print and you look at my contracts and you see I had 10 of them. I didn't never grab them at the same time. I average into that position, you know what I mean? And so I can get the best cost for everything. I never buy all those plays at once. So I got one. And again, even if it dropped down to 500, I got one play right now. And that one play going print. Now, KK or anybody that played last earnings with us can tell y'all, we got fucked last earnings, right? Because the last 2 weeks, the 2 weeks were the week before earnings and the week of earnings. Facebook stock dropped, right? And we were just in some plays because we was making so much money leading up into earnings. So when you high rolling, you want to get back in the game, So we was making money on them contracts every week. So we just kept playing them. So the 2 weeks leading up into earnings, we in these plays and we was losing. So we even grabbed more earnings plays. So we start grabbing somebody grabbed the three, like some people had the 325 and the 320. I know Dallas had a 315. I had a 310. I started grabbing 310s. The highest I had was a 315.
No, I had one of them 325 ones too, but they was expensive when I got it. I remember I paid like $6 something. Yeah. And we thought that was cheap. And then it like kind of dropped even more. And then that was right before that 2 weeks too. We would have waited.
If we would have waited, right. So that's why I was telling KK, I'm like, look, I said, look, I know y'all asking me questions, because KD was asking too, like, when we gonna get into these earnings plays? I'm like, look, I think history says that we should wait, because we're gonna get a pullback. I don't know when it's gonna happen, but we're gonna get a pullback. And it's so crazy. I'm trying to look for these earnings plays, but I got so many Facebook plays in my history that it's fucking ridiculous, man. But yeah, so it was just so many. I had, I printed off of the 330, I had puts. I had 330 puts, after earnings. Oh yeah, so my biggest play for Facebook earnings was that 305. I grabbed the 310, the 305. I even had a 300 strike. So when the market pulled back, I didn't just go back to the strikes that I knew of. So that's what I'm saying. When y'all just listen to certain parts and just don't come back to revisit the information or do any due diligence on your own, you just remember, okay, I remember A said, get the 350 or 355 strike. Those things change. I'm not even thinking about a 355 for earnings. Although Facebook going to shoot up do I think Facebook going to shoot the 360 plus? Absolutely. But right now, do I want that? No, I want my highest probability strikes. I want, now I'm foxing the 340 strike. If Facebook drops some. If it doesn't drop, then, hooray, I'm in some plays already. And I can go ahead and average down on the other plays that I have or whatever. Or if I'm going to play a strike like the 355, I'm not going to play it for the week of earnings. I'm going to play it for some, some further out. You gotta really strategize a little better. You can't just, like I don't mind taking the bet that, my quarterback going to score 3 touchdowns in a game, but that's not realistic in the fourth quarter. I need more quarters for that. I need more time. So you got to give yourself more time on these strikes if you're going to choose certain plays. based off of what you're trying to get. But like if you're saying I'm only trying to make 25% off this play, and I see this play is down like 90% right now, okay, I can throw a ban in this strike right here, and all the stock got to do is move this much, and then I can get out. That's if you ain't trying to get in the money and you ain't really trying to hold. But I don't care who you are, what you're doing, you should have a strategy. None of us should be thinking about holding through earnings. None of us should be thinking about holding through earnings. The only way we should hold through earnings is if Facebook is still down substantially the week of earnings. You know what I'm saying? So I play earnings run-ups, and I'll hold a straggler or two, but keep in mind, earnings always happen after hours. So the next morning when that stock market opens up, depending on how that thing plays out, you may, unless you have a limit order set real quick to do something which never really executes, you may, you got to have an idea. If you say, okay, I know next day after earnings, I can make 100% off this play. If I set my limit order at this, you got to set the limit order pre-market. Make sure you set it pre-market. And so let's say hypothetically, you got the 350 strike or 355 strike, and Facebook beat earnings after hours. You could have been down like 100% on your play, right? And you say, okay, I want to make 100% profit, not just break even. I want to make 100% profit on this play. The best way to do it is this. We betting against algos and bots. The market makers aren't doing this. They're not manually executing these trades. So they got us beat right there. So this is what I use. I always like to play that game. I had an NEGG play, puts, the other day. Soon as the stock halted, the first thing I did was set my limit order immediately, my sell order immediately, because I've seen it happen before. I set that shit high. That shit sold as soon as the market opened. It didn't work for everybody. I don't know when people did it. I mean, I've had it happen to other people and not happen for me before, but that's a different scenario. They halted the stock. But this situation, you say, okay, I want to make this amount. So you go in pre-market, and you want to do a pre-market because it got to be the day. It can't be the day. Any order set the day before it's not gonna execute. It's gonna get canceled before the market. Sometimes after hours work, but I don't trust it. I do it the day of. You set that limit order. So if you paid $100 for the play and you down like 100%, let's say you down to the play is like worth like $99. I mean, negative $99 right now. Let me say, damn, I don't want to just break even. I want to make 100% on this play. And Facebook beat earnings, so I should be able to get 100% out of this. But if you just wait until market open and just hope that it get 100% and then you can go put that order in, a lot of times what happened, market open, the stock will shoot up and then pull back. And sometimes the Greeks recalculate, and it's just some weird shit that go on, right? If you set that limit order and say, I want to sell this, and you type in manually the price, the bid price, you type in 200 because you paid 100 for it, but the play is worth $1 now because you're down negative $99. You type in 200 as your limit order and you submit it. When the market open, I guarantee you at some point it's going to touch that order and it's going to trigger it and it's going to sell, because that's how the bots work. Like, for example, on Wednesday or Tuesday, when Facebook shot up to 358, man, if I had a limit order set for like 6 bands or something real quick, and sometimes I do that, I'll just have a random limit order set in there for because I'll have like 9 or 10 Facebook plays. I'll have a limit order set to sell the play at at a certain level, and then I'll just see orders will randomly get executed. So you can set some crazy astronomical number, but it got to be realistic. And if you use the options calculator, as a matter of fact, I'm gonna bring that up right now because I haven't talked about it, and I know for sure that a lot of new members don't be in the options in the learning channels learning stuff. I know for sure they don't because of some of the questions that I get asked. So I be knowing that, but I'm gonna let y'all live right now. But you just let me live when y'all start losing all of that money on y'all plays and looking crazy. Don't blame me because y'all were profitable at one moment. So I'm gonna give y'all this, I'm gonna show y'all this options profit calculator to give you an idea of how to calculate some of this stuff when it happens, right? So let's choose a strike. So let's say we chose, let's look at, what's this week coming up? Oh, the 20, shit. That's this week. Oh yeah, I mean, that's this week right here, I guess. Oh yeah, we already on it. My bad. I was up all night. I was up all night. So let's say I have the 350 strike. I'm gonna put the mid price in here. I don't like this price, but yeah. So say I got the 350 strike. Now, do anybody know a price that, let's say, all right, like 350? I'm gonna say, all right, because for that week, I probably paid like $300 for some of them plays. So I'm gonna type $300 in. I'm just gonna leave it at 340 something, right? Say I got one contract. That's how much I paid for it. Go ahead and do calculate. So looking at this now, forget percentage for example. I'm gonna go to just profit and loss by dollar amount real quick. And this is just for the week. So for right now in the price range where Facebook is in, and this is, you can see how theta work here. All this red stuff is theta, but look, so I got the 350 strike. Facebook is all the way, damn, I forgot we all the way down here though, sheesh. So look, so in order for, on what's today's date, the 18th, all right, so the 19th, in order for you to make some money, because right now, this play is already down like over 200 and something dollars overall, right? If you look at it, Facebook would have to go up. So like if Facebook went up to 341 tomorrow, you only, instead of being down, let me go up a little higher. Hold on one second, because it's doing by that dollar amount. You see as it's going up and up, as I get higher. So as I go up, like if I stay down, if it stays at 341, I'm negative 222, 227. If it goes to the 342, I'm negative 211, all the way up. If it go all the way up to 347, but this is all, it all depends on the rate of change, because you got other Greeks and everything. This is all based off of the information that it has to calculate off of when we closed on Friday. So this is nothing, it's not even accurate, but it's just giving you an idea. Go all the way up to 347 and you still you got back most of your profits on it. So you would have to get up to 348 before you start being profitable. Now if Facebook moves a lot though, Facebook just shoot up to that price, you're gonna be profitable like shit right away, because of the way gamma works and in conjunction with delta. And then volatility is going to increase, so that means the implied volatility is going to increase, and the play on it's different things going to make it calculate quickly different. This is all based if all of the other Greeks stayed the same. But look, I want to show y'all this. So look, if Facebook went up if this is just an example, Facebook was to jump up to 354 at market open tomorrow from where it is now, that means your play would be $5 in the money, right? The 350 strike, that would be a $358 profit. And again, this is just an estimate, because I'm just being technical. And so what I would do is, off this calculator, I'm like, let me type in my limit order price right now, pre-market, to sell. Like if you got more than one contract, let me set a limit order in there to sell one of them for whatever the cost you have now, whatever the cost of it is, plus an extra, this amount, you know what I'm saying? Whatever that dollar amount is, even if it's negative, do that times this particular amount, and put a limit order in there to sell it. So if the market was to give you a nice run up real quick in the morning, as soon as that order gets triggered, the algo sells it, but this just gives you an idea. And again, this is based off of the close. So I wouldn't even use these Greeks, this calculation now, but it's giving you an idea, of how theta work. Now you see every day that you hold the contract, you get every day that you hold, theta is time decay. So you're getting time burned off of your option just for holding it. Just because you own it, you're losing money just every day. You know, is money being taken off of every day. So, but yeah, this is just a good thing to look at. And I do this all the time. So like I had some 355s too at one point. I got rid of all of them. I had a limit order set to sell all of them things, man. Like even with my Netflix play, that thing was up substantially. I said, you know what? I don't want to watch it no more. I got to watch Facebook. I set a limit order, sell it when it get to 3 bands. As soon as 3 bands hit, it sold. So, and it did it right away. And but the whole point is you set those limit orders, man, that algo gonna get it for you because you'll never catch it as fast. You ever try to put a sell order in, even if you put the bid price in directly, it won't execute sometimes. On the way down, it never does because it keeps getting lower and lower quickly, you know. But on the way up, you can always, that's why I always say selling the strength. Whatever price you put in while it's going up, it's going to sell because it's still going up. So yeah, this is just something to keep in mind. So it's some of them plays y'all have, you can still sell them for a nice profit. And especially people who can't really watch the plays. If you say, okay, I'm in this Facebook play, I paid $400 for it, I want to make 25%. So that means you want to make $100 profit. So you pay $400 for the play, you want to sell it for $500. Set a limit order automatically as soon as you buy the play to sell it for $500. Don't be hoping for something else, because if your goal, look, I told myself when I first quit my job, I said, look, I want to make $500 a day. If I make $500 a day, I didn't easily replace my income, you know, easily replace my income at work, you know. So then I moved it up to $1,000 a day, you know what I mean? And on average, that's what I make. But you got to set them limit orders, man. I don't do it that much, but I just started doing it last week again because you get cocky and you be in other plays, and then y'all want to get into everything I call out too. It's not realistic that you can watch them all. Man, Square and Facebook start running at the same time, I'm fucked. On Friday, man, on Thursday, my bad, on Wednesday, Square ran up. You know what I mean? I was up like 1,500 on Square, didn't sell. I missed that sell. When I looked at it, it was now only up $800. So I ain't want the $800 profit. I ain't want that. You know, guess how much I sold it for on Friday though? I sold that shit for $200 profit on Friday. But then my 140 strike, my bad, and the 345 strikes, man. 245 strikes, they expired worthless because I totally forgot that I had that strike. And then when I finally started paying this on mine, you know, it was just, you cannot watch a whole lot of plays at once. I can't watch 2 major plays because when they both start running, it's over. You get what I'm saying? So when I tell you I don't get in all of them plays, I'm not trying to stop you from getting bread. I'm trying to save you from going through the shit I did. And I ain't counting nobody money, but the last way you want to learn is you can learn how to trade options, and you can learn to be a great option sniper, but you don't want to learn by most people learn after they already ran out of money. And that's not how you want to learn. Now, are y'all able to see this earnings screen right here that I got up now?
No,
Okay.
we're still looking at the option calculator.
Okay, damn, I forgot I switched over there. My bad. What about now?
No.
Not yet.
Okay. Oh, all right, hold on. Let me do it like this. Do it like this. Do it like this. All right, cool. How about now?
The earnings screen?
Yeah.
Yeah, we see the earnings screen.
All right, cool. So check this out. Right? So on Friday, my bad. On Thursday, my bad, Netflix ran all the way up to like 565. I told y'all once it filled that gap at 546, it was going to go. That shit ran up like $20. I sold it at 5. As soon as it closed the gap, I sold it. You know, that's when I had the limit order to sell it. They got earnings after the close on Tuesday. Netflix pulled back like shit on Friday. Netflix pulled back to like, I think below the gap again. So if I go to Netflix now, Netflix plays are expensive. I call them out, but I don't call them out that much because nobody really play them, but I call them out anyway. So yeah, Netflix pulled back. Netflix closed at, oh my God. Netflix closed at 5:30. So this is what I'm saying. Though Netflix is a FANG stock. You know what I mean? It's five stocks that run the whole stock market right now. And they big tech stocks. And they the FANG stocks. FANG is an acronym for Facebook, Amazon, Apple, Netflix, and Google. You know what I mean? So that's the those stocks run the stock market pretty much. They make up 35% of the entire S&P 500. So they all report the same week except for Netflix. They report the week before the other FANG. So Netflix closed at 5:30. Now keep in mind, on Tuesday, after the close, Netflix ran up to $600. I mean, almost $600. And yeah, so but it closed at 5:30. It closed below where I sold my place. So now, if I was not thinking about Netflix on Friday because I was foxing Facebook and I was looking at SPY and everything. If I get an opportunity on Monday, I'm throwing a bag at Netflix because, like, for example, the strike I had was the 515 strike. Now that strike is still expensive as hell. It closed at 28.40. When I bought that strike, I paid like $12.50 for it. So it's still up way over what I paid for it. But I'm saying you don't have to buy that strike now. Netflix already gave us a broadening formation. It showed us that, real quick, I gotta show y'all a chart because I hate talking without y'all seeing a visual of what could be going down. So give me 1 second. I want to show y'all a chart real quick. This is more important than anything. And I'm gonna stay on. I got this, y'all. I got this. Right. So hold on. Netflix. And again, this could apply to any chart, but I'm just pulling up Netflix just to give y'all an idea because you might want to play Netflix. I know y'all be putting money in, y'all be putting bands and shit like Safe Moon. So I know y'all can put some money in on Netflix. And in Dogecoin and shit like that. Like, I wish I had that homie the clown emoji right now. Like, homie don't play that. But now I've been a clown too, like on a lot of plays. So I'm just messing with y'all. But yeah, so Netflix, right? Man, you gotta look at it like this. Netflix ran all the way up. The highest Netflix been this past week was 566, right? But Netflix, the lowest Netflix been this week was 530. Now I ain't had Netflix under 530 since when the last time Netflix was under, well, not under 530, but I'm just saying, like, that's crazy though. Either way, we built up here, Netflix been in this range, but then shot up into this range. The fact that it gave us a broadening formation. So that's like, it's almost like, how they look at your, I hate to use that analogy, but they use it, they look at, like, everything got a history to it. You know what I mean? Like, when you go to the hospital, your doctor looking at your medical records to see what your body is capable of. The police looking at the judge look at your background and see what you've done or what you're capable of doing, no matter what you're doing now, or even with your resume, they looking at your history to see what you've done. We judge ourselves by what we know we capable of. Other people judge us by what we already done. Netflix shown us that it's not weak no more. That news, the market makers will run this shit up. Netflix ran up to 556, in one day. The market makers did this. We don't have enough money to make candles move like this. I don't care how many of us do it. Market makers do this. This is smart money entering and exiting the market right here. So Netflix ran up this high and then it went all the way down here. So I said that to say, if I switch back over to the strikes real quick, which is what I'm gonna do, try to see this. You can get in a Netflix play, you can get in a 555 play and be like, okay, but for earnings though, and that's what I'm down at earnings. Oh shit, that's where I'm at. I'm at earnings. But yeah, I can go down to earnings and play a Netflix earnings play. It's a lot of people already up here. but I don't know when they bought these plays. But yeah, I do on Friday because so if you're looking at an options chain, right, the volume resets every day, but the open interest doesn't reset. It either add or subtract because again, the open interest is how many contracts are being held right now. The volume is how many were bought and sold that day. So these are strikes that people bought for earnings, you know, and now Netflix got earnings this week that's coming up, but people bought plays out this far. I like this strike here, the 335, 535, but if I was to buy one strike right now, I would honestly buy the I don't know, I like where's my I like the 550 strike. I like the 550, but I wouldn't buy that strike right now. I would do this. To be honest, Netflix got earnings this week. I got a feeling Netflix gonna beat the hell out of earnings because the analyst already gave Netflix a lower rating because they missed the numbers as far as growth. Back in the fall, Netflix missed earnings and by 1 point, by the estimate by 1 point, and fell off a cliff, but it was back up like in 2 days. That's what I was expecting last earnings, and it didn't happen after they dropped, but they dropped because of they didn't increase in new subscribers. So but for this week, what I'm saying is I showed y'all Netflix ran up that much, and for it to pull down to 530 for it to close. My bad, it closed at 529. For it to close at 529 because the whole market pulled back on Friday. For this week to be able to get a Netflix 550 play for under $1,000, you see how many people look. 2,300 contracts were bought and sold on Friday, and 3,800 contracts are being held right now for this particular strike because the market makers already shown us that they're willing to run the price all the way up to $556. So if Netflix beat earnings, this strike right here, man, it was down $600 on Friday. You know what I mean? It was down $600 on Friday alone. And the thing is going for this, but now hold up. Some people want to go a little high out. You know, the 560 strike, Netflix got to Netflix went to 566. So the 550 on the 565 strike is not bad. You know, people like this. The 560 strike, my bad, it's not bad. 2,000 contracts being held, 1,600 contracts were bought and sold on Friday. So I look at snipers like this. And so when we talk about, them out of the money strikes and everything, I'm not choosing a strike that the stock hasn't shown me that it can get to recently. I'm not basing it off of like things that Netflix has done in the past. I'm looking at universal truths, things that happened recently. And Netflix shown me recently, based off a broadening formation that I just shown y'all on this chart right here, that the market makers are willing to run it up to 566 based off of that news that they hired the ex-exec from Facebook to run that new gaming sector that they're starting. And Netflix, I think Netflix should buy GameStop. They have the money to do it. GameStop is just a dead man walking right now. And Netflix could buy GameStop, and that would just be clutch. GameStop right now, if what Netflix is doing will be to GameStop what Netflix was to Blockbuster years ago. Netflix, to put Blockbuster out of business, so it can put GameStop out of business for what they're trying to do now. Then they hired that ex-Facebook exec who was heading Facebook's VR, AR technologies and things that they're going forward. So that's perfect. Facebook already starting their gaming platform and just bought 2 gaming companies or whatever. So they starting their own platforms, man. So so Netflix just hired somebody from Facebook who was heading that AR VR department. So man, Netflix, and they ran up off of that news right here. So imagine an earnings beat that they already got a low estimate for anyway. I'm gonna pull up what the estimate is for Netflix earnings. But again, they never had a problem beating earnings estimates, really. It was just, and now it's gonna be lower. But But yeah, long story short, the 355 and I mean that 555, that 560 strikes, they look really good for this week. Netflix got earnings on Tuesday. And I just think it's it's one of them things, man, where you just I ain't saying you gotta play it, but I'm just saying, like, when you think about those, think about the probability. And they report earnings after the close. So they're gonna have so much news coming out on Monday and Tuesday that's gonna help the market. And again, I don't know if this bear market is gonna like hey Salim, I see you popped on here, bro. And you're big on gap fills. Did like how much farther do we got for SPY to fill this gap fill on the hourly that it had? And matter of fact, let me just pull up the chart so I could just see it, because I always asking you about these gap fills when I can just pull up the damn chart. So I'm gonna pull up the chart too.
SPY yesterday filled it.
Oh, it filled it?
Yeah, at close. Well,
Okay.
not at close, but on that last candlestick, it filled the gap.
Okay, cool. All right, good information. See, I was just so if because what I saw for SPY, I was like, all I saw was a broadening formation after hours. I'm like, okay, so where are SPY already telling us that it want to go back up to 335? I mean, for 435. Hold on, shit. I hate when this shit does this. Hold on. There we go. I'm gonna break this down on the hourly for a second, only because I'm gonna turn after hours on. I got after hours on. So y'all see here, this was the close right here. We closed this candle, the low, I mean, the close on this candle was 431.40, but right after market close, we got a broadening formation that took, well, I wouldn't, this is not even a broadening formation actually. So it's volatility expansion. You know, it's definitely not a broadening formation. It's volatility expansion. It took, price went up to here, went back up to it went close to, start pushing 335 right here at the close. I mean, after the close. So it's showing us that price, that's where they you know, where it's willing to go, but it can go lower. They also shown us, because we can't ignore this. Like I was telling y'all on Facebook last week, you know, we can't ignore that just because you're a bull on something, you got to look at both ways. They gave us this, and this is consistent because the last, you know, it showed us at the bottom was here, you know, the 430, the 430, what is that, 430, 90, 430, 92. So it tapped this twice on two different candles on the hourly. And so that was the low. That's where that was the lowest it was willing to go. And it looked like MACD was trying to turn that corner after hours, and now it's consolidating again. You know, this could bear flag and go down. Who knows what happened? It depends on what the market gives us pre-market. Now, keep in mind, you're gonna start seeing SPY move later on tonight. So start watching. I'll be watching SPY, man. SPY gonna start moving later on tonight. I'm gonna be watching it, and I'm gonna be watching QQQ. Because if SPY, whatever SPY does pre-market, is going to give us the overall sentiment of everything else that's going to happen this week. But yeah, you got any thoughts, Salim, or any comments?
On SPY?
Yeah, I mean, or just anything.
I think, to be honest with you, Monday morning might not look too great. SPY, or at least market close, it kind of ended in like that bearish pattern. So Monday morning, I don't think it's going to be like, it's going to open up, I feel like, a little bit down, but it'll probably run up after that because that gap's filled, and SPY right now is way oversold. So
yeah, so I agree with you on that, because again, where it ended and then the price kind of held down, they still held the price down after hours. So that's why I'm saying I'm gonna look and see what SPY starts doing tonight, like around like 8 p.m. from like around 8 p.m. to like 11. That's when SPY start moving on Sunday. So I'm gonna start, yeah. So I'm gonna start watching it and see what it does, and then after that, pre-market, because you know the futures market starts moving around then. So that's when we're gonna start seeing the impacts on SPY and QQQ, which is going to be very important because QQQ hit that hard bounce at 357, which is what saved Facebook, in my opinion, from dropping. But like I was saying before, on that, we can easily see 330, 328 if depending on what the market does at open. So that's why I was telling everybody, just like, be ready with some be ready with some clarity and some conviction on what exactly you want to do. And again, there's nothing wrong with hedging. You can love a stock, man, but I feel like this. Look, man, I ain't in love with none of these stocks. I'm in love with the I'm in love with the money. Like I ain't making love to the stocks. I'm making love to the money. So it's like if the stock can give me money on the way up and the way down, that's where I'm trying to be. I don't care what stock it is. I don't care about that. I will buy a put in a minute when it's time to buy a put. You know what I'm saying? So, but let's be strategic about this, right? And just think about the probability of your strike and the Greeks on the strike when you make these moves. And like I was showing y'all, like for the week of even if we go back, and y'all see this on the recording, but like even with like when I use that those Netflix plays, for example, man, Netflix got earnings this week. And matter of fact, I'll go back to the earnings screen for a second because there's some important things we got to cover on this screen real quick. And I know this recording went over, but it will be posted because it's gonna go on. I'm gonna post it on YouTube and just post a link in the thing because there's a lot of important stuff on here. But if I go back to earnings for this week, outside of Netflix, right? Because obviously I'm bullish on Netflix. Chipotle got earnings. Chipotle needs to split their damn stock, number one, right? The stock is just, we need a stock split on Chipotle so we can afford Chipotle. I can't afford Chipotle right now. But the last two earnings, they had good earnings, right? And it runs. Johnson & Johnson is another good one I'll be watching. Coca-Cola. I'm not playing Coca-Cola or Johnson & Johnson. Texas Instrument, Prince. Texas Instrument, Prince. So this is on my watch list. Now I'm gonna tell y'all, I made a joke about Crocs last earnings. I was like, damn, I didn't even know Crocs was on the stock market, but they had some deal with Justin Bieber or something, but then they ended up beating earnings and that shit shot through the stratosphere. I'm gonna show you the chart, the earnings chart from last quarter. And somebody unmuted, and do you have something to say? Or are you trying to say something? All right, I keep muting. But they got earnings, man. I'm gonna be watching this stock because another one that's really important for earnings to watch is, see, man, these airlines, they risky to play around earnings, man. I stay away from them. Snapchat is pretty good at earnings. Twitter, see, last earnings for Twitter, what happened was Twitter fell off a cliff, not because they had bad earnings, but because their user engagement decreased. And the user engagement, they expected it to be higher, so it fell off a cliff. And a lot of people bought some calls that were just like out a month later and they printed like crazy. So like I just be sitting back. You don't want to play earnings on these stocks. None of these, not even Facebook. You don't play earnings on the stocks. Like you holding through earnings has to be a strategy that you only do under, based off of certain parameters. If the stock is oversold before earnings and the probability of them beating earnings is high based off of your due diligence, then you bought it. And the implied volatility is low. Over the last few weeks or days, what I've been doing, I made a folder for Facebook, for the Facebook options chain. So I take screenshots of their earnings, their options chain every day, so I can have a screenshot of the different levels of the implied volatility, where it is, where it was. So when they get closer to earnings, that'll help me determine whether or not I want to play earnings, because the way you get theta clapped is if you there's some Facebook strikes I just showed y'all that had an implied, that had a vega of 40. That means for a 1% increase in implied volatility, you get $40 added to your contract. So, and on average, an implied volatility could go up like 10%. So you get a 10% increase, that's an extra $400 added to your contract. So let's say you say, okay, I want to play Facebook earnings. The stock look low right now. I'm gonna get this play. I'm gonna pay $300 for this play. No, I'm saying, let's say you pay $400 for this play, or it might be $500 for the play. Facebook beat earnings, but the play is down low anyway, and they have a little run. Your contract would normally increase by like 400 or maybe something more, depending on what strike you get. And once the event happened, the hype is gone. There's no expected move now because the event has already happened. And then you get theta clap because now in that theta, that increased, that 10% in implied volatility just dropped out of the contract because it was only inflated because of an expected move. It's almost like when you got an athlete, you don't know what team they're going to go to, and it's free agency. So it's a lot of hype around them, and it's a lot of speculation. So they can possibly get more and all of this other stuff. But once a decision is made, the hype is dead. You know what I'm saying? So it works with options the same way. The implied volatility dropped, and now that $400 increase in the contract that you paid because you bought it at the hype, that gets snatched from your contract, and that's how you get slapped. You get crap. You get clapped. Now, this company right here, Los Angeles Sands Corp. I like this because what's your name that own
the Mavericks.
Yeah. What's my guy name? You know who I'm talking about. So you already on it. So I can't think of his name right. Mark Cuban.
Mark Cuban. Yeah, that's Las Vegas Sands.
Yeah, so you feel me? He big on Las Vegas Sands, and then this is the perfect time, man. I just got them beating earnings this time, and it's just a good company to have and everything. So I mean, I'm gonna be watching that too. But I mean, the companies I'm probably gonna find a way to get into maybe is Texas Instrument out of all of them. Out of everything I see here, I mean, and Netflix pulled back. If I can get a good entry while the stock is down on Monday, because I was so worried about what's going on with Facebook, and that's where my biggest investment is. But you know, Netflix and Texas Instrument are my two that I'll be watching. You know, but like I said, Crocs printed last earnings. They had a good one. Snapchat normally have pretty good runs, but it's hit or miss. You just gotta deciding whether to play earnings will depend on whether a stock is oversold, overbought, if they already had a run up. Honeywell is a good one also. So there are a few big companies on here. I say research, man, and see what you want to do. Because I mean, you can see the big airlines now, airlines coming back, but I just don't, it's a toss up, man. I don't just jump in earnings. Earnings is the ultimate gamble. You know, when you plan earnings without a strategy, even with a strategy, earnings is a gamble because of the inflation of the prices, but everything is on sale right now. But it doesn't mean it's going to be the same way, because again, I don't care what we all talking about right now. Everything we're talking about, I don't care how long we be investing. I don't care what these charts says. It's going to be based off how the market makers feel tomorrow morning, based off of what the futures market does tonight. So futures markets open 24 hours, and whatever the futures market does, you know, and it's just so many different elements to look at. Are y'all still able to see the earnings screen, or are y'all seeing something else? My bad. Just want to make
No,
sure.
we say the earnings screen.
Yeah, so you know, just based on that, like I said, like one last I'll post those numbers and stuff that I was talking about in terms of levels and stuff to get in for Facebook if it drops below certain things. But there was one other thing, and you know, that I wanted to kind of to touch on. And I know there was some it was what was it? It was I forgot what it was we were talking about, but it was something that I know that it was something else important that we needed to 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 um to discuss, and I forgot what it was. I don't know. Hey, Salim, did you, matter of fact, I know you on Friday you posted something about gamma exposure, and I don't know if you wanted to touch on that today because it's important. I mean, at the end of the day, I think it's a little advanced for everybody, and I think people should like go on it. But I think it was important that, you know, when you mentioned the gamma exposure on Friday and how it has it plays a big impact on SPY, you know, especially with regard to volatility and things of that sort. I thought, you know, I don't know if that's something that you wanted to, you know, touch on or.
Not today because I don't have like stuff prepared right now. But
Okay.
if you want, I can have something up for you like Monday or Tuesday. Yeah.
Okay. Yeah, because cool. Because what I wanted to do was I wanted to and I'm just going to just touching on it right now. I already started working on a little like just like something just to go over one day, maybe this week, just in the group after hours or something, just go over broad informations and just like I got some charts. I got a whole lot of patterns and things like that to kind of look out for. And I got a whole chart and things that I have been working on, but it wasn't finished yet. But I got most of the graphs and everything done and part of my video done. But I already started working on the channel that y'all probably don't see yet. But I just think it's time to kind of move everybody, like have people who want to kind of go move forward with it to start learning about broad informations and how they work, because it's easier to look at them, but you got to know still the basics of everything else without kind of overpowering. So I don't throw out strategies like that until people really know support and resistance. And most people still don't understand the basis of support and resistance. So yeah, but nah, we crazy week coming up, man. Opening this up for questions right now and shoot. Any questions? All questions are cool.
I'm glad you touched on support and resistance for a second, because for me, I'm still only using support and resistance on my chart. I haven't, I look at RSI sometimes, but I've taken it off my finger swim charts and I've taken a TTM squeeze and all of that off my charts because I want to be very familiar with support and resistance before I use anything else or look at anything else. So my question is, with support and resistance, I start like the highest time for it, and then I work my way down, and I leave them all up before I, you know, fully go into decision making time when you want to enter and exit. Is that the proper way to continue doing it?
Hold up, your phone was going in and out, and somebody else had unmuted, and it kind of like interfered with what you were saying. Could you repeat that last part again?
Yeah. I said, so when I do my support and resistance, I start at the highest time frame, and then I work my way down until I get down to the lowest time frame before I decide my entries and exit points.
So this is what support and resistance. Now I did a video, right? Where
I keep watching it every day. Yep.
yeah, so that video, the reason I come pointing out to that video is because, like, again, that video was cool and all, but you know, and I kind of just like kept drilling down on that, and I feel like sometimes too much information kind of can be overkill. Now let's say this, I'm gonna give you an example right here, and I'm glad Salim on here too, because you know, like if he'll probably jump in and say something if he wants to. So look, SPY is a good example of this. So right, let's say I want to play SPY, and I'm gonna look at the daily for SPY. The reason I'm looking at the daily is because pretty much typically, I'm not touching the weekly right now. Typically, the daily is going to give me an idea based off what type of trade I'm trying to make. Like if I say I'm only trying to hold, if I'm in a position and say, okay, I may hold this position for a few days, maybe 1 day or 2 days, if I reach my top profit target. So basically, if I'm thinking that SPY, like I'm in SPY right now, I grabbed another SPY call right before the close. I posted it in the chat, you know, like 5 minutes before the close, right? While SPY was down this low, because it's going up. So if I look at the daily chart and I say, okay, right now, support and resistance, strong support and resistance for SPY over this past week was between, you know, and it's just like me just doing this right now, I'm just looking at this right here. We say like it's in a range of this range right here between 437 and 431, right? So so it's like a $6 range or $6 range here we have for SPY. Now, I mean, obviously I see this here. I'm just saying like let's do this right now. So I got this range here, 1, 2, 3, 4, 5. So we're going off this week, just 1 week, right? The range we got for SPY over this last week is this range here. So if I'm basing it off of that, if SPY gets down to 431, which is what it did, actually SPY dropped to 430, which is a problem a little bit, because once SPY drops below a certain level, I'm like, oh shit, the lowest SPY went the week before was down, you know, I say one of the last, you know, one of the last lows that SPY had was like 427, right? So, but this is what I also did, because, you know, I don't use moving averages and everything like that. But look, when SPY did drop to 430, when it dropped to 430, it barely touched it. You know, we got to realize this: support and resistance, these are imaginary lines that bots and volume by price creates. If you look at the volume by price, there's not a lot of volume here at this level. You know, it wasn't a lot of volume at that level, but this is the 20 moving average, exponential moving average, the 20-day 20 exponential moving average. That's where SPY bounced off of pretty much. But I say it bounced off that, but it also, well, it didn't touch it, but that's where it was, right? It's trending above it. It ain't too high above it. When it did pull back last week, it still was above that 20-day exponential moving average, right? So if SPY was to drop a little lower, the 20 EMA is right here. So I don't got it dropping below that in this range right here. And then on top of that, we still got the 21 moving average that's here. You know, the next major moving average that we had, where my 50 at? My 50 is all the way down here. I don't got SPY dropping here. It did everything it needed to do here. We got MACD about to turn up. We got the relative volume came in, all of that. So back to your original question. If I'm just looking at support and resistance, SPY showed me that the few times this past week that it touched. Now, for the most part, while the market was in an uptrend, you know, SPY was riding that 5-day exponential moving average. You know, when the shit broke down, you know, it went down to the 9 EMA, you know, and then when it broke down further, it got saved by the 20 EMA. You feel me? So, and I see the last time it had a hard bounce off of these, it's, you know, it bounced off the 20. So I like the 20 as a solid one, but back to support and resistance. If I'm looking at the weekly, I don't need to break these time frames all the way down into these other frames. And the reason I don't have to do that necessarily is because I looked at the daily. Like if I'm choosing a position to get into, I want to look at the daily to make my decision. If I can't see a play entry on a daily, I'm gonna go up higher to the weekly to see if I can get higher on the mountain. Sometimes you can't see, if you on the same level of everybody, you gotta go up higher to get a closer look. If I go up on the weekly, which is bullish as hell, by the way. I'm gonna show you here. Hate this chart, man. There we go. So on the weekly, you see we have broke out of this wedge. When we broke out of this wedge, we're still above this wedge, which is great. You know, on the weekly, we're still above this. On the weekly, we're still above the 5 EMA. We're riding that 5 EMA. And what we've been riding it for the last 3 weeks. We've been above it. And we're out of this wedge. Very important to me. So I'm like, okay, my overall trajectory does not change because it doesn't change. We see there's a lot of volume that came in here, you know, on the weekly at this particular level to stop price from going below this level. And so I like what I'm seeing on the weekly. I don't got to look at the monthly right now. I don't have to. Now I'm gonna go back to the daily real quick. Looking at all of those time frames, it's not necessary for finding a position. It based on how long you're planning on holding it. If I'm planning on if I want to buy some monthlies or something that don't expire for a month and I'm looking for a big move, okay, I might look at the weekly chart and make my entry based off the weekly. If it's looking bullish on the weekly, I don't care what happened one day. Like somebody might say, you know what, I'm going, you're not going to make long-term decisions based off of something that's happening one day or for 1 minute, because we make those short-term moves and we miss out on those big term, the long-term gains and stuff like that. So, you know, if I'm just start with the daily. Support and resistance on the daily is the most important. Unless you're doing a scalp, and I don't see no reason why nobody here should be doing scalps. If you know what I mean, like most people here are beginners. There's no reason why y'all should be in scalps, but look at the daily. If the daily is showing me we got major support here, and you know, I see it bounced off of the 20 EMA. Last time it hit this level, it was right here. It bounced. You know, we want to be above here. The overall market is still bullish. You know, this week coming up for SPY is a 67% win rate. Let's see how the market opens up. MACD looked like it was trying to turn up. But like I said, we were holding here. Let's see what SPY does. I think this is the bottom for SPY. That 430 was the bottom for SPY. If it touched 430 again, I'm fine with that. But I'm in calls. I grab calls here at support. I believe this is a strong support level for SPY here. So, you know, like all of that other stuff, like looking at all these other time frames for what? That's what I'm saying. Like, there's no reason to look at them. In that video, I was giving Dallas an example of how the support and resistance that I established on the daily, because of time frame continuity and because of the price aggregation, is pretty much the same. That's all I was doing, was just showing that the only reason I switched time frames on that particular thing, on that demonstration, was to show y'all that the time, like the support and resistance is still the major support and resistance. And another thing that I feel like everybody should look at when determining support and resistance is, if you go into the Discord and y'all can see the Discord screen, right? Or no?
Nah,
No.
I still see the chart.
All right, I just switched it. My bad. All right, cool. So in the Discord, right? If you if you go in the Discord, like one of the most important things to do to determine where you know, about support and resistance and everything is when you go in here and if you look at the trading checklist right here, this trading checklist is important. I don't care how long you've been trading. You know, if most of your questions, you can answer them yourself by going here, because the first thing it's going to ask you, you know, like, is the ticker above or below the 20 moving average? You know what I mean? What's the first key level of support and the first key level of resistance? And then the second, and the reason I switched to that, because I'm gonna switch back over to the chart real quick. I'll go back over to the chart. Where the hell did my chart go? Second, okay. I switch back over to, the chart. Now I'm on the, I went down to the 4 hour. I was on the hourly, the daily at first. The major support and resistance is whatever the support and resistance on the daily is. So when you go down to these smaller time frames, of course, I can go up and find other smaller support and resistance, because, like, for example, Salim will do this all the time. I'll be looking at Facebook on the daily or the 4 hour or something, and I'll even have a bigger the main support and resistance, or main wedge or something, or trend line on the hourly. Salim will come back and be like, man, you see that bear flag forming, right? Because you can go down, and because price doesn't move, it aggregates. So you can always go in to a smaller time frame. Let me show y'all something and find more stuff. Like, for example, this SPY chart, like I told you, this is the major support and resistance here. This one here on the daily, but on the we on the hourly, I can actually, on the 4 hour, I can go up here and find another support and resistance up here somewhere. You know what I'm saying? I can see there are a few of them where you can see, and this is a 4 hour chart. where you know, a flag where it's been flagging or whatever, and a certain range. So you can see price in certain ranges. So you can always do it, but you don't have to do that. If your goal, if you're not scalping and you're not looking at something short term, if your overall goal was, you know, to hit, it should always be to hit a certain profit target. And it's like, okay, if on the daily, because I'm gonna go back down to the daily for a second. If on the daily, this is so annoying, man, at times. There we go. If on the daily, you know, support and resistance is between 431 and 437, I'm like, okay, we bounced at 431. I got in here. So I know I can at least get to 25% real quick. So most of the time, like Salim was like, if that gap gets filled and we go down to 430, I'm throwing the bank at SPY. So don't be surprised if you see Salim posting like bands of contracts next week on SPY, because he had a plan. He didn't panic when the market dropped, because he was hoping that we got into this zone so he can throw his whole bank account at SPY. You know what I mean? And so I jumped into some plays on SPY too when it got here. I don't care about everything else that's going on. I care about my percentage. If I throw $1,000 in SPY, you know what I mean? And my plan is to make 50% real quick. You know, as soon as I go up 500, I'm getting out. You know, that could happen quickly. I can go, like, SPY gonna start moving as quickly. It's gonna bounce off of this after the little pullback happens on that first candle, if we get that, because who knows what's gonna happen pre-market. But I like when it, you know, if I just, the only thing I don't like about having gap ups is, you know, gaps always get filled. And if, you know, so it's different. But yeah, so now, so everything should be based off of your profit target. Now, going back to, like, if I go back to this, to the 4 hour again, really quickly on here, and I say, okay, what else is going on? What's the overall direction of the trend? Because this is another thing that's very important. Asia, you asked some really good questions, by the way. This is like, look, this is so important right here. Everybody say, okay, support and resistance. You learn one thing. It's not the only way. Yeah, support and resistance could be here. You know what I mean? Like how we had it on that, you know, that time frame between 430, 431 and 437. That's support and resistance, you know, but at the same time, you can also have resistance move like this directional too. So I got resistance like this too. Like you see the trend. So like price bounces off of trends too. So right now I'm gonna do it like this. Hold on, my bad. And just to kind of keep it short, I'm gonna do it like this, just to make this a little more whatever. I'm gonna do it like this, just show y'all something real quick. So you ain't gotta go back too far. I'm looking at what price is doing right now, the overall trend of the market. Sometimes you see price moving like this. Hold on. And it's a 4 hour chart. I hate this time frame when I'm trying to draw like lines sometimes, but that's what I'm gonna do. Pivot points and watch this. Price moves on trend line. So this could be support and resistance too. Like, look, so price moving, if long as it's bouncing here. Now look, so everybody looking at SPY, how SPY pulled back here. But on the overall trend right now, it's still on an uptrend. It ain't dropped below where this line would be here. If it did, then the trend breaks down. But also there's another trend. And the reason I had to draw this is because, you know, this is my 50, I believe, or it's my 100. Okay, this is my 50 right here. Price dropped below my 50. You know what I mean? But this trend line here, then we got support and resistance here. The next support is this 100. You know what I mean? The 100 moving average, right? And I don't, but I'm looking at this. Price moving. The last time price dropped below the 50, it got caught by this trend line right here. So it's using this trend line as support. It tested this before. I got a little faith in this right here. It bounced off this time. Let's see if it continues to move up. If it does, then we know this trend, the uptrend is still intact, right? So that's another thing. So what you can use, like lateral support and resistance. You got the slanted support and resistance, and you also got the EMA or just moving average support and resistance. Even support, just says support. My bad, not necessarily resistance, but you do have sometimes it hit resistance points at certain levels too. But yeah, but my whole thing is, so the trend is still, this trend line is support. So don't just look at this as support. They just so happen to cross right here, but that trend line is support, and lets me know the direction of the stock. So there's so many ways to look at support, but you know, but what you want to do is just base it off the daily. The daily, your support and resistance on the daily will be the same on any time frame. That should be your main support and resistance, depending. Now, if you can't find it on no other time frame, you might have to go up to the weekly to now look for your next level of support. Now, real quick on this chart right here. So it asks you what the first level is, what the key level, and then the second one will be what the second one would be, like how we just found another, you know, like whatever the first one is, whatever the breakdown is, that's the next one. Now, this is important. What's your first price target? You know, so if I want to get 25%, what is 25%? You got to calculate that. Like I said, if you pay $400 for a play, 25% is $100. You can put that limit order in and it'll automatically sell your play. You don't have to be watching it for that to happen. You know, what's the average true range of your stock? If you don't know what that is, then, you know, like you got some work to do. You know, you got some things to work to do. Like, for example, I'll show you some of my favorite stocks because I keep a watch list. Here, average true range on Facebook is 7.4 to 7.14. So Facebook moves an average of $7.14 per day. That's my average true range for Facebook. I know that, right? So you got to know these things. And, you know, and don't ask me how to find the average true range. Ask Google, you know what I'm saying? Because, or you can go into the, you know, like, again, obviously this Think or Swim, but you can go into the New Members Academy. I got all of this information in there for you, right? So, but that's how I found it. Google showed me how to find it. But look, so, but this question right here gives you everything. What's the catalyst? Why are we playing this? Why are we playing SPY? SPY just, you know, SPY is oversold like hell. It just bounced. It just filled the gap, and the overall market sentiment is bullish. Okay, that's my catalyst. This is a strong buy zone for me. Okay, cool. Calls. Are the candlesticks close to support? You know, or have they bounced off of support more than once or twice? The candles off of SPY, the SPY chart, yes, we saw support. It bounced off that support twice, you know, going into the close, right? And several times throughout the week. So we know that's major support right there. You know, are the candles at the bottom of the Bollinger Bands, you know, like, so I don't use Bollinger Bands like that, you know what I mean? But you can use Bollinger Bands. That's cool too. It kind of gives you a range of the stock or whatever. So, and let you know when something is over. So like you can use, matter of fact, so another thing I use, well, I told everybody in the beginning, you can use RSI. So you don't have to use all of these indicators, but as a beginner, certain things you use. Some people use VWAP. I don't really use VWAP like that, but is the price above the 9 EMA? You know, is RSI near or below 30? So, you know, if RSI is near or below 30, you know, that's giving you some confluence, you know what I mean? It's letting you know that, okay, we at support, the RSI is at or below 30. So we know it's oversold right now. Is the overall market sentiment up or down? You know what I'm saying? Like this stuff is important too. You want to know if like if it's a sector up or is the market up? You know, is the market going higher highs? So all of these things are important. This is for calls, you know, and then for puts, you got the reverse stuff. So, you know, and this is why I always talk about areas of confluence. We want to look at the time frames. You want to look at the setup. Is that a bull? Is it a bull flag? Is it a bear flag? Is price coming? Did it break out? Did it hold? And then lastly, and your target entry amount. you know, how much you're willing to pay to get in. Like we were talking about those Facebook plays, like I'm like, all right, I like it around this price. So but if you're watching it, then that means you're not just blindly jumping in a play. And you don't have to say to me like, is it too late to get into this play yet? Or is it too early to get into this play yet? You don't have to ask me those questions if you already got this stuff set up, you know? So everybody's expected to do this. Now, if y'all want to pay me and Salim to kind of like, you know, like to be your personal like financial advisors, you know what I mean? Like if we look at the average for this area, man, y'all gonna be paying us some bread, man. Like just even to consider it, y'all will be paying us a lot of money to be your financial advisors. But for you to be in a group like this, you feel me, paying like $19 or $29 and getting in these types of plays and all of the information that we've extracted the information from all of the hoopla that you would find trying to go look on Google yourself, all of the financial jargon, all of the bullshit, the things they're trying to sell you and only give you a certain bit of information. In order to get the real shit, you got to buy something. All of that, man, all of that is extracted and you get it here. And I just got everything like isolated right here for you, you know? So all you got to do is figure this stuff out on your own. Like, what's your target entry amount? You know, like I want the Facebook earnings plays. I want it at this price. I just showed y'all like on Netflix at this price. Oh, I want that. So you'll know what's the target exit amount. So you can't tell me like if you get into a play, you can't say, well, is this, you know, when should I get out? You should not be asking me that question because I don't know. I didn't get in where you got in at. So, you know, I may have paid $100 to get in. You may have paid $200 to get in. So, you know, I may be my profit. I may be wanting 75% off of this play. I don't know what you want off of it. It should be based off what you want. You know what I mean? What's your stop loss level, Wes? And I mean, how much are you willing to lose? Like I'm willing to go down. If I pay $100 for this play, I'm willing to go down to $50. I'm willing to be negative $50 before I let my stop loss get triggered. Okay, so then put that amount in. You know what I mean? What's your actual entry amount? How much you paid for that premium? So you want to keep track of this stuff so you know this stuff. Because if you ask me a question, I'm gonna want to know all of these questions, you know, and you should have that information because most of the time, if you have this information, you won't even have no questions. You know what I'm saying? And what's the actual exit amount? You know, and what's your percentage gains or losses? So this stuff is important. If you know it, then you'll be good. Trust me, you'll be good because I'm gonna tell y'all what happened is like you don't want to be in a situation where you're saying like you know, should I hold or sell? Because again, don't nobody know what you paid for it. Don't nobody know what you know, what you know, and what your goals are. So and again, just keep in mind time decay, man, because it decreases the value of contracts. On Friday, on all last week, market was bearish, but I gotta give this one, say this one last thing, and I'm gonna be done with this. On last week, we all got into some Facebook plays last week. The market was crazy last week, but man, Facebook was nice, was great to us last week. I had somebody say to me, I had a member say to me this weekend, was like, man, I was just hoping, you know, like I was like, what lessons did you learn from playing Facebook this week? And they were like, not to hope. Everything, all my loss was based on hope. I'm like, what? I don't think that's the right word to use because I'm like, hope is like, you know, like you're in a bad situation and you're hoping Jesus come save you or something. But Facebook, like, you know, Jesus gave, you know, like came down and just and gave us a whole lot of money. Like I know I was up by Tuesday, I was up 150% on my Facebook plays because I made my goal for the week that day. You know what I mean? Or I made some substantial goals, some amounts, and I didn't sell. You know, did I buy a few puts? Yeah, I did buy some puts. You know, I ain't buy enough, but I bought some puts. And at 355, because just in case the price didn't continue up, I had some insurance puts. I didn't have as many as I should have. But yeah, so then even on Wednesday, we were still profitable on plays that we stayed in, the people who stayed in, hoping that it was going to go higher and end up losing those profits on Thursday. You know what I'm saying? So I wouldn't say Facebook was a hope situation. It was You know, bulls make money, bears make money, but pigs get slaughtered. We got slaughtered because we were being pigs. We were profitable on Monday, Tuesday, and it still had profits left over on Wednesday, and we stayed in those plays. So I want everybody to learn who stayed into some of those plays that you can't do that. You know, if you have your own profit targets, look, I laugh at stuff like this because I still was playing with Facebook profits that I made on last week. You know, what was it, last week or the week before? I made 10 bands off Facebook. I was still playing with profit with bank money. So people jumping in here with their life savings and then trying to hold plays for the same amount of time that I'm holding plays. You can't do that. If you're playing with money that's very important to you, all money is important to me. But at the same time, I'm willing to risk more money if I'm playing with profits than versus playing with money that I need for bills and stuff like that. Like I had somebody get on a Zoom pre-market on Monday and was like, DM me on Monday and was like, look, I'm going on a trip this weekend and I need a substantial play to get into. I got $500 or $600. What's your best play? I said, get on a Zoom. They jumped on the Zoom. I'm like, this Facebook play right here, get in here, get in right here. They got on the play, got out. And then when I talk about the sniper plays, as far as the in the money puts, when Facebook got the 355, Facebook got the 355. He bought an in the money put at the top. You feel me? Made money, got out. Now he in fucking Liberia right now. I saw him on Instagram posting pictures of them in Liberia. I'm like, this motherfucker. I'm talking about Lil Walk, right? So you feel me? He went in, did what he did, got out and left. But the whole point is, he played the game. And Tiana, she made a comment in the chat, you know what I mean, the other day that was important. You know, like there were opportunities to take profit. You have to take profit. You have to have a goal. And so it's important. And another thing, there are people, and again, this is just, and I'm gonna open this up, last thing, but I gotta say this, and I'm trying to find the best way to say this. When you get in a group where people are making a whole lot of money off of plays, like I know it's people that have been in this group since it started, and that and been here for 7 months. And if you look at like the price it is to cost to be in a group, right? Like for 10 months, that's like $290 or something like that. Most people make that in one play, one of the baby plays. And that's one of the small plays around here. There are people who come in this group who expect to join this group for 30 days and learn everything we learn and just like, or just, I'm gonna go in here, I'm gonna try to get as much as I can get, and I'm gonna go ahead and get out. Or they come in here and they just wait for you to call out plays. They don't go into any of the channels to learn anything. And then we don't even send you there most of the time because I have bots that post information after the plays to kind of reiterate to help out, because we went through some trials and tribulation. Like Asia, Dallas, you were here since the beginning. You know, even Salim, you came around like when I was starting to make some change, but we were trucking through this shit together, and we making changes as things go along and making it better for the new people. So they got it easier than we had it when we were starting out in here. Like, so if you don't use if you don't come to the study groups, or at least pop on a Zoom, you don't have to be able to talk on the Zoom. Put one of your AirPods in and go do what you're doing. You get a chance to pull your screen up and go look at it if you want to get in some plays, or if you just want to hear what's going on, see the charts and know what we're talking about, so you can live and breathe this stuff. Ask a quick question while you're doing what you're doing, but you can't just expect to just somebody to call out plays for you for $20 or $30, and they're the most substantial plays that you could possibly get. And if I ain't calling them out, Salim posting some substantial shit in the play, I mean, in there, or we just got some charts that are just letting you know, like, these are the charts. Like, I post a lot of charts in the chart channel and for the advanced people in the group, and they just go and just and they just get into those plays on their own because they know what strikes to choose based off of the profit targets and margins that I put in there, right? So it's information in here for y'all if y'all really want to learn. You don't have to come to the study groups, but it's encouraged that you come to them. This is not on your time. You know what I mean? Y'all not paying us like you know, thousands of dollars, like the average cost to have a financial advisor, where you just go play golf all day and your financial advisor do this work for you. Nah, we will go out and I'm telling y'all, I done seen some of y'all pages, not on the card, people on the card, I'm just saying in general, people. I've seen some of y'all pages got the Casamigo bottles, they $59 a bottle, and the designer, you know, grass, all of that other stuff, you know, that's top, you know, won't touch it, won't touch that shoe if it don't cost a certain amount, and a frown upon somebody who match two brands together. But when it comes to your financial freedom, that can really actually stop you from being poor, you want to be frugal with that. Oh yeah, I'm gonna pay this $30 and I'm gonna try to learn all of it. I'm gonna try to just I ain't gonna do no research because I don't got time to do research. I don't got time to go through those channels. I'm gonna pay this $30 and this shit better work for me without me doing nothing. And if it don't work, I'm just gonna quit this, because that's a half a bottle of Casamigo I could have got right there for that $30. You know what I'm saying? So if that's your mindset and you just joined and you're a new member and it ain't been 30 days yet, just DM me. And if your plan was different, DM me and I'll gladly refund your money, because I'd rather you to leave the group with a positive outlook that it just wasn't for you than to leave me a bad review or something. You know what I'm saying? So look, my refund trigger finger is like, it's heavy as hell, man. So I like doing refunds, man. So like, I'm more about the experience than anything, man. I want y'all to learn. It's not even really about the money, it's about the experience here. So let's get this money together, man. Again, if y'all got any last minute questions, let me know. We had this meeting early for a reason, so we can, you know, we good. So is this the last call for questions? And yeah, man.
I got another question for you real quick, because me and Google gonna fight. When you talk about rolling a position, whether you rolling to a lower strike or rolling it out another week, you technically talking about investing more money in another strike or in the next week, right? Because you just basically lost what you lost. If you still got money there, you're going to sell it and you're going to invest in the next, right?
The term rolling doesn't have anything to do with winning or really losing, or like rolling. Like, for example, I'm in a 350 strike for Facebook. I buy a 350 strike for week ending this Friday, the 25th, right? Ain't that the 25th, 23rd or 25th, whatever this week is, right? And I can see by the way the market going right now, by let's say by close of business on Monday or close to close of business, I'm like, I don't know if we're gonna get back to 350 by the end of this week. Let me roll this position over the next week. You know what I mean? So I'm rolling it into another week, a longer expiry. You know what I'm saying? I'm not necessarily changing the strike. I need more time on this position to play for this to play out. You know, when it comes to like being at a loss and stuff like that, necessarily like averaging down, so just the terms, forget the terms. Forget learning the terms. It's more about the strategy. So forget Google and all of these terms. I'm just saying, like, forget the terms. It's about the strategy. You know, we throw terms around here a lot, but it's about the strategy. If you're in a play and you don't think that play is going to finish in the money and you're going to lose more money, get out of it. I had to tell, and good question, by the way, Asia, because I'm going to post more of the terms and their actual definitions, and then I'm going to break them down the way I interpret them, because sometimes them definitions be weird, man. They'll give it to you in financial jargon on top of financial jargon, and it throws you off. But no, that was a good question, because there are with regards to these. So shit, I was talking about something I forgot, but it was just like pretty much about this these strikes and the rolling. You just want to be sure that it's more about that play finishing the way you want it to finish. Oh yeah, that's what I was going to say. So somebody was in some 355s. I told her, I'm like, sell them 355s as soon as possible. She say like, well, I'm down like $100. I got two of them. I'm down 50 on each. I'm like, please sell them as soon as possible. She was like, yeah, I'm gonna try to get back most, man. She sold them things probably like she probably sold them things down like 350 a piece. I mean, probably not a total of probably a loss of like 350 altogether or something. Because I'm telling you, this is off of my experience. I'm like, man, Greek's gonna recalculate. The more that thing bounce, every time your play hitting support and is not trading higher, the trend is getting weaker and weaker, and eventually it's gonna break through there. You know what I mean? So, like Salim was saying, man, the way SPY ended, it looked like it's going to open lower because it was like it kept breaking, it kept hitting that support. Yeah, it was strong there, but eventually shit gets, it's like a bulletproof vest. You keep that shit going withstand for a while, but eventually you're going to break through it. You get what I'm saying? So sometimes you're gonna have to take your losses and take them early, man. Like everybody on this call can probably relate to being in a position where you were down, like, shit, I'm down $25. I want my money back first. And then before you know it, you sold that shit down 75%. Like, damn, I could have been sold that and I could have gotten the 2 other strikes if I got out of it and set in cash. You got to sometimes just get out. So the rolling and everything, Asia, like I say, when I'm thinking about, I'm like, okay, I'm rolling into this position, but and the reason I say rolling, because I'm rolling that over into the next week, you know what I mean? Or whatever that particular strike is, if it is a different week, or, you know, or so on, I'm rolling it over to that next, you know, the most probable, you know, the most probable chance of me being, you know, profitable. That's just what I would rather do. You know, I would just yeah, it's just like you want to get into a better position at that point, or not even necessarily better. Like, for example, my Netflix play. Netflix was profitable. I sold it. I was planning on rolling that position into this week because, you know, I sold it for a nice profit, but I knew Netflix was going to continue running. The plan was to buy, you know, close that position and then open a new one, you know, for the same strike or maybe a higher strike, because now I know the trend is my friend and it's going up. So now I can roll this position into a different one. So it don't necessarily have to be the same strike, but you're rolling. And so I look at that. That's like a combination of the average down, averaging up, averaging in, things of that sort. You know what I mean? So, but you getting more time on your position when you're rolling it, though.
That makes sense. Okay. I understand what you're saying. So I have one last thing for you.
Oh, you good?
Before I shut up. So I seen something on your Facebook. I don't remember exactly what you said, but it was something about the sentiments you wish you could get people to invest or trust you or something like that. So within the group, I noticed some other groups and some other people, they do like 30-day challenges, like 500 to 5,000 or 500 to 2,500. We should probably do one in our group to show the new people, you know, that we could all pick plays together and we could run up the bank together and learn charts and stuff on whatever stock day or that week that we're choosing to run up together.
So we had so we weren't on the calls, but we had me, Salim, Tierra, KK, Dallas. We were all talking about this on Zoom 2 weeks ago.
Sorry, I had a kid in ICU for a month.
Got you. So KD and you know, we were talking about it in the group, you know, and we just never really like locked in, because then everything we said we were going to wait until this month started, because we were going to start it last week, but then we was like, nah, I just want to kind of get it like whatever, this last week wouldn't have been a good week to start it anyway. But
it should be after earnings. So right now everybody trying to run up their money for earnings, you know what I'm saying? So it should be after earnings.
But I feel like if we did have that shit locked in last week, we all would have been profitable and we all would have got out, because then we would have been locked into our profit targets like we supposed to, and we would have been locked in. So yeah, I mean, we can do those things right now. I mean, and we can do those things, and I'm all for doing those things. Yeah, like Salim was saying, he and I were supposed to get up and come up with some shit, because I know Salim had did some shit like that before. So I wanted to kind of have his like whole whatever, because we can start it whenever. I just want an actual definitive date, but I'd rather it be after Facebook earnings too. So, you know, because once Facebook earnings is over, then I can lock back in and we can just target, we can fox out something and do it. It's easy to do, and it'll make us all more disciplined. So I'm with it.
Right, and it's also a learning opportunity for everybody, even the new people in the group. Stuff that we could also, it's also a marketing opportunity for you. You know what I mean? But it's just something to say, hey, this is what we're learning, and this is how you can run a small account up to a big account, or this is how you can make daily income or whatever.
Yeah, and so again, like it's all about like again, because everybody would just everybody would have to just like lock in on this trading checklist, and then we'd be able to do it. We choose the same stock, and we do. Everybody have their targets, and we stick to them. You know what I mean? So yeah, yeah, just circle back with me on it so that way to keep us on it, because we need to come up with a date, and really make this happen, because we're supposed to do it, but I'd rather be after earnings, but like we can start working on it. I already created a channel for it, so for us to talk about it in the channel, I just got to make the channel public, and you can actually do that today, make it public so we can talk about it, because the challenge was 500 to 2,000, and just something small, just to get everybody started real quick. That was the whole point. It's like 500 to 2,000. I mean, 500 to 2,500. That's what we said.
Okay, right.
Yeah.
Like you said, just something small, just to get everybody started. And for babies, you ain't got to have a lot of money or bank, but this is where we can start at. So then you can jump into those Facebook plays or those Square plays or whatever.
Because at the end of the day, like the whole thing about that is, and we already talked about this, like if you don't, it's got to be 500. And the reason it got to be 500, because no matter what, it's going to be different plays called out. Everybody can't get into every place, because the overall goal of the challenge is this. If you start off with 500, everybody's on the same playing field. So that means I don't care if you got, hold on 1 second. So I don't care if you got 1,000, if you got $1 million, whatever. If everybody got 500, that's it. So that means nobody can get into any position that's more than 20% of their available cash. So that means you wouldn't be able to get into a play that's over $100 to start. You get what I'm saying? That's how, what is it? No, yeah, 20. Yeah, you wouldn't be able to get in a play that's over $100 to start. And then after you take profit, like you set your profit target, okay, I want to make this amount. Then that's when your position size get bigger, and then you still keep up to that 25% though. I mean that 20%, because if you do that, that's how you grow. That's how you get the discipline. The people who don't do it, because if you take a loss, you got 4 more tries at 20%. But so anybody who be in these plays and they just jump in with all of these plays because they see something and they take a big loss, that's their fault, because you're not supposed to be in any positions with more than 20% of your available cash in your brokerage. You know what I mean? Not what's in your positions already. I'm saying what you have sitting in cash, should be 80% left of what you have in plays right now. You get what I'm saying? So it's got to be that way. If you're not there yet, then but yeah, that's how we start. And that was one of the rules we were setting for it. So the 500 to 2,500 challenge. But yeah, so that's how we're doing that. And I mean, everybody can get into that challenge. So, but yeah, let's get it together and make it happen. Let's make it happen. So I'm gonna make that channel public so everybody can do it. Get in it. Any other questions or last minute questions or thoughts, concerns?
No, I think you answered all the questions that I had when we were talking about Facebook earnings and the August expiry strikes.
Okay, cool. I'm gonna post it. I'm still gonna upload this to to YouTube and post a link into the chat, and we go from there. So y'all enjoy the rest of y'all Sunday then, and I'll talk to y'all. See y'all later. Peace.
See you later.
Later.
All right, see you.
All right.